Cast is now starting. All attendees are in listen-only mode.
Hello, everybody. Good morning, and thank you for joining us for another session. Um, we're happy to share and discuss with you our insights on the third quarter 2022 global cement trade prices report. So on the agenda, the two presenters, myself, Prashant Singh, I'm the director at CW Group here in Mumbai, and my good colleague, Mr. Vandishan Teixeira, who is a business analyst at our Lisbon office, who will be going in much more detail regarding the actual trade prices report. So for today's call, the agenda is very simple. We will give you a brief introduction about the CW Group. We are going to then talk about the trade prices report highlights and the macroeconomic overview, shipping overview, and then the trade prices report discussion in detail. So just to give you a brief describe about the CW Group, we're talking about three different verticals. We have the advisory, the research, and the media vertical. And within these platforms, we give a whole host of advice under the advisory umbrella to major investment funds, international institutions, as well as other major consulting and advisory firms. One recent example of our advisory portfolio is we did a detailed study on the circular economy for the MENA and West Africa regions. We have also done a complete business process analysis for an online art gallery. And we are working with the World Bank on a multitude of different other projects, especially in West Africa. Under the research umbrella, we focus on the global cement demand, as well as detailed country and industry reports. We provide both a historical as well as a forecast for each of the markets for the variety of products that we offer, including the trade prices report, which we're presenting today, and a complementary report, which is the volume forecast report, which will be released mid next month. We also provide commodity price assessments for cement, clinker, as well as petcoke and coal for those of you who are interested in those commodities. Lastly, but not least, we have the media umbrella, where you can have access to our vast database of online articles. You can subscribe to newsletters of topics of interest, including cement, building materials, paper and pulp, petcoke, bulk, as well as coal. And we have now restarted our in-person meetings. And for that, we would like to invite you to the Cement Business and Industry Brazil and LATAM Alternative Fuels and Raw Materials 2023, which will take place in Sao Paulo on the 15th and 16th of March next year. So if you're interested, please don't hesitate to get in touch with us so that we can share more information regarding this. So without much further ado, let's get into the report. So in this section, I'll provide a global highlight in terms of how the world economy is doing, and also introduce you to the report before Vanderson will take you much more into detail. So what does the trade prices report include? It includes a quarterly update with the second quarter and the fourth quarter having a more substantial update in terms of the coefficients. We look at the gray, white cement, clinker, and granulated slag prices on a per ton basis We provide regional price indices as well as monthly volumes. Special of interest is the ex-works and retail prices for many of the markets that we'll show in the next slide. The data, we try to cover almost all regions, and we're always constantly on the search for adding more countries to this database. As you can see, there are a lot of white patches in Africa, and that's predominantly because we're unable to get a reliable and consistent supply of data, but we are striving to see which countries we can add to this portfolio to give you more insight into this major cement consuming region, especially in West and Central Africa. So let us now delve into the macroeconomic scenario, and to give you perspective on this slide, what you see is that global economic recovery, which has been actually losing momentum for the past few months, is now losing its growth outlook even more. The IMF is expected to downgrade considerably its growth expectations for the world, as well as the major economies for 2022, and in the short term for 2023 and 2024. As you can see, one of the major challenges this year, vis-a-vis what happened in 2020, was that the Chinese economy this year is also showing very anemic growth. Some would say a after effect of the zero COVID policy, which forces complete stoppages of economic activity to contain the virus. If that was not bad enough, we have had the continuation of the Russia-Ukraine conflict now going on for more than 6 months, with no real sort of declared end in sight for now. And the persistent high inflation resulting from this unfortunate event, has put pressure on both global food prices as well as energy prices. And this is impacting growth significantly in Western Europe especially, but also across other markets. As you can see, the outlook by the World Bank, the IMF, which is of recent vintage from July, are all sort of depressing. The latest one is OECD, which is from this September. And as you can see, that the growth estimates are just slipping and slipping. Although for Europe, the OECD expects a little bit higher growth than the others. The World Bank tends to be the most conservative of them all, and the outlook, according to them, is significantly worse in the next year because of the continued elevated energy prices. And the recent announcement yesterday by OPEC, the OPEC Plus group, to cut 2 million barrels of oil is not going to help the global global growth cause, because it will ensure that global oil prices increase, and any sort of relief that might have been expected is now not going to be there for at least the next 6 months. If we go on to the next slide and look at what is happening in Western and Central Europe, as you can see, Russia has been bearing the brunt of many sanctions, and perhaps one could argue deservedly so, but that is impacting the global energy scenario. So ban on all imports from, especially to the EU, of oil from Russia by sea has been an important reason why energy prices in Europe are so high. Now with all the gas shut down from Nord Stream, This will again ensure that this is a long-term event before things can get resolved. Just recently, again, in early October, the EU approved another increased sanctions package on Russia, pretty much ensuring that the Russian economy, which has so far managed to sort of weather the storm, will become under even increasing more pressure. As you can see, also the United States is also in tandem with Europe, increasing more sanctions on not only individuals but also companies. And the UK has actually banned any Russian companies from purchasing services from British firms. So the challenge for the global economy is how to sort of come up with an alternative source, given the fact that major oil producing nations such as Russia, Iraq, Iran, and Venezuela are under considerable sanctions, and OPEC, being a cartel that it is, has sort of now put the squeeze on the global economy. This will be a considerable challenge over the next 6 months to a year to see how we can sort of grow in tandem with sort of these harsh cuts in terms of oil production that are expected. So I would now like to pass on this presentation to my colleague Vanderson, who is now going to take you more into detail about the shipping aspect, and as well as then launch into the detailed discussion regarding how the trade prices have evolved in the last quarter, and what is our expectation by the end of this year. So thank you so much. And Vanderson, over to you.
Thank you, Prashant. Hello, everyone. So, considering all the recent events that we have seen, it's impossible to have a better understanding of the trade prices for cementitious products without actually looking at the main sea freight rates and container freight rates as well. In terms of the Baltic Dry Index, which is the main sea freight index tracking rates for ships carrying dry bulk commodities, as of October 5th, it settled at 1,996 points, with rising rates across all segments boosting this freight index. The Capesize sector in the last week of September had a positive performance, boosted by activities in the Atlantic Basin. Meanwhile, in the Pacific, rates fell due to severe weather, which raised concerns about vessel sailing schedules being isolated to the Philippines and Florida with the Typhoon Nuru and Hurricane Ian. Meanwhile, when we look at the Supramax, in the last week of September, there was a small decline in inquiries in Asia due to the upcoming holiday in China. On the other hand, in the Atlantic, activities remain positive, and in terms of the Handysize index, we saw gains in the Atlantic as well of gains that came with an upward pressure on rates from key areas, including South America. For the third quarter of 2022, the BDI index declined 32.6% quarter on quarter, while the Handysize index saw a decline of 32.3% on a quarterly basis, followed by Supramax index with a decline of 32.5%. In the short-term period, we expect some seasonal improvements in the dry bulk market, and with that, the overall freight rates might return to a pre-pandemic level in the next couple of months. However, a lack of new builds on top of limited supply, increase driven by regulation might boost the market recovery in the second half of 2023 and early 2024. And we also see that the earlier than expected change in China's zero COVID policy, or even a ceasefire agreement between Russia and Ukraine, remain the major positive outlier. While strong China's domestic coal production remains one of the major downside risks in the medium to long term. Now, when we look at the container freight rates, commonly known as the Freightos Baltic Index, we have seen a decline in the past couple of months as reduced port congestion levels, along with weaker cargo arrivals, have put a downward pressure on freight rates. In a normal scenario, during this season that we have now, a peak in freight rates for containers would be expected. However, as we are seeing increasing risks of a global recession as consumer demand declines and rising on top of rising living costs and inflation, these freight rates are expected to continue to decline at least until the end of 2022. Now, in our next slide, we also give you an overview of energy prices evolution so we can have a better understanding of its impact not only on production costs, but also on transport costs for all cementitious materials. In terms of the bunker fuel prices, as of September 29th, they have decreased by 14% in the Med Basin on a monthly basis, while during the same period, prices have declined by 2% in the Persian Gulf and 8% in Northern Europe. We see a slowdown in construction activities in China and India that have also impacted, in this case, coal prices in the third quarter of 2022. And also natural gas prices, especially in Europe and the UK, have continued to sharply decline as the continent has filled up its gas storage ahead of schedule after flows from Russia have been severely curtailed. In September, the Newcastle coal price is expected to have reached $436 per ton, up from $397 per ton in the previous month, due to a spike in demand from Europe. And as you can see, in terms of electricity prices in Europe, we are seeing a surge since the beginning of the Russia-Ukraine conflict, with many industrial producers seeing their production costs increase manifold. As the conflict goes on, energy prices across the region continue to increase, even though major economies, including Germany, have announced plans to combat these skyrocketing prices. For instance, in August, the average regional price for electricity saw an increase of 33% month to month, after a sharper increase of 43% in July. Of course, as a result of these factors mentioned previously, the global export and import prices for all cementitious products, they are continue to be impacted by these not only high electricity prices, but also energy and fuel prices. Of course, this happens at different levels, depending upon the product type, shipment, and also the regional scenario. Now, to dive into the content of our trade prices report, I will start by providing some insights on the current market situation. But of course, the report itself includes a much more detailed analysis of what is happening and what is expected in the next quarter for both ex-works and retail prices. So as you can see here in this slide, ex-works prices in the third quarter are expected to see an increase on a quarterly basis across several regions, with the exception exclusively of South America, South Asia, and China. In the case of China, cement prices have started to decline after peaking in November last year, And then since mid-July, prices have been humored to increase, giving producers an optimistic vision about what might happen in the peak season, which usually starts in late September, beginning of October. However, as a consequence of this sequentially prices decline over the past months in almost all provinces, we are seeing on a quarterly basis exports prices estimated to decline by more than 11% in the third quarter of 2022. However, in the last quarter of this year, we might see a different scenario because we also have the Chinese Communist Party having its annual Congress, which is expected to make create a scenario where we have major policy and funding being announced. Therefore, we are expected to see a boost in economic activities, which will likely positively impact prices in the fourth quarter of the year. Meanwhile, we have the Med Basin, where Egypt and Tunisia exports prices are expected to witness the biggest increase on a quarterly basis of around 7% and 5% respectively. This is happening mostly due to increasing production costs in both countries, driven by high energy prices. We also have here, as you can see in the chart, Eastern Europe and CIS having the highest exports price increase quarter on quarter in the third quarter at almost 20%, as the region continues to be heavily impacted by the ongoing conflict between Russia and Ukraine. Russia by far is the country to have the biggest exports increase in the quarter because of all the economic sanctions that have been imposed by several countries. And we also have in the region Kazakhstan's exports prices expected to have one of the biggest increases as well on a quarterly basis, with their price index in the construction have been seeing a surge in the past couple of months. For example, we have this construction price index year to date in August seeing a rise of more than 100%. Well, on the other hand, you have North America, where the U.S. exports prices is expected to see an increase of 2% quarter on quarter. And we have also the Hurricane Ian, which is the most recent event, likely to drive demand in certain regions. And on top of that, we also have a market that is very constrained, where we have supply chain issues that also add pressure on prices. And there is also, in the case of the US, the midterm elections, which will impact federal funding for transportation and infrastructure as well. Therefore, the demand outlook in the next few quarters could be impacted by these elections. And lastly, we have Western Europe, in which case exports prices are expected to see an increase of around 1% quarter on quarter in the third quarter, with all markets witnessing prices increase due to rising energy prices, scarcity of raw materials, and delivery delays, which also are adding pressure on cement prices. Now, in this next slide, we are presenting cement exports prices variation, but in this case on a yearly basis for the third quarter. As you can see from the map, we have several countries witnessing a yearly price increase from an increase of around 70% in Eastern Europe. And in the case of China, we are expected to see on a yearly basis a decline of almost 14%. We have, for example, in the case of Russia, exports prices estimated to have a robust yearly increase. This, as I mentioned previously, has been worsened by economic sanctions imposed by several countries on Russia, which is having an enormous impact on the Russian economy. In the case of the US, we have an expected increase of 15% year-on-year in the third quarter. To give you an example of how the construction sectors is behaving in the US, in July 2022, the value of construction put in place in the US decreased by 2% when compared to the previous month, while on a yearly basis, we have an increase of 8.5%. And the number of building permits also are seeing a behavior of decline of 14.4% year-on-year and 10% month-on-month. In the case of South America, we have a yearly ex-works price increase of almost 11% estimated for the third quarter. And Brazil and Argentina are amongst the economies with the biggest increase in terms of ex-works prices, being followed by Peru and Chile. In the case of Brazil, the cement industry is facing increases in production costs as a consequence of the ongoing Russia-Ukraine conflict. Therefore, ex-works prices are expected to see an increase of around 18% year-on-year. Of course, more detail on countries can be also found in our report. Now, in order to better understand the trade prices dynamics, and before we actually jump into the trade study, I would like to start by providing some country level insights when it comes to cement demand. So as you can see here in this slide, overall, we are seeing demand starting to decline in several markets in the second half of 2022. For example, we have Pakistan cement sales declining by 10.7% year to date in August, after a decline of 8.8% in the previous month. We have Morocco with cement demand decreasing by 7.2% in the first 8 months of the year, after a larger decline of 7.4%. And Brazil, we have a decline of almost 3% from January to August, whereas demand reached 42 million tons in the period. However, we also have other countries like Spain, Colombia, Peru, and Argentina witnessing a demand increase in the past couple of months. More specifically, Peru demand grew almost 6% in August, after a growth of 6% in July, year to date. And we are seeing with that a mixed trend among the regions with the ongoing political and economical scenario that we are all facing. Now, to provide a context of the global market scenario, here we have a volume analysis of trade of cementitious products in the second quarter of the year. On a global scale, gray cement exports volume, they have increased 3% quarter on quarter, while decreasing more than 8% year on year. The Med Basin in Asia Pacific, Japan, were the regions that reported the biggest export volumes during the quarter, with Turkey remained the largest gray and white cement exporter in the second quarter of the year. We have, in terms of clinker volumes, globally a decline of 2% quarter on quarter, with Vietnam remaining the largest clinker exporter during the quarter. When it comes to white cement, there was an increase of 1% in terms of volumes in the quarter. And at last, we have slag export volumes, with Japan remaining the biggest slag exporter, with a share of almost 50% of total exports, being followed by India and Germany as well. Now, in regards to the CW price index for the cementitious products, we have gray cement exports during the second quarter seeing an increase of almost 9%, with the Med Basin prices increasing more than 10%, while Asia Pacific Japan saw a biggest price drop of around 19% quarter on quarter. On a yearly basis, we have the CW price index for gray cement in Eastern Europe rising by more than 17%, with the region representing around 8% of the global traded volumes during the quarter. Now, for the third quarter, we expect the CW price index for gray cement exports to witness an increase of around 4% compared to the second quarter, with the Med Basin experiencing the largest price increase given their production costs as well. When it comes to clinker exports, the CW price index in the second quarter saw an increase of almost 7% quarter on quarter, with the Med Basin experiencing the largest price increase. And for the next quarter, we expect the price increase to see a 1% rise compared to the second quarter, with the Med Basin and Eastern Europe seeing the biggest prices increase on a regional basis. And lastly, we have the white cement price index for exports during the second quarter, seeing an increase of around 10%. In terms of volumes, globally, there was an increase of 1% quarter on quarter. In the third quarter, we expect prices for this cementitious products, to see an increase of around 5%. Of course, this increase is most attributed to rising inflation rates, which added to the sharp increase in electricity, coal, and natural gas prices caused by the geopolitical conflict between Russia and Ukraine, are likely to boost the increase across all cementitious products, but mostly white exports. In this next slide, we have an overview of the CW price index for gray cement exports, and here we show a quarter-on-quarter percentage change between our estimation for the third quarter to our forecast to the fourth quarter of 2022. Globally, the CW price index for gray cement exports is expected to continue to see an increase in the fourth quarter as a result of the increase in production and transportation costs that has been aggravated by the geopolitical conflicts and also the pandemic. Eastern Europe and CIS is forecasted to witness the biggest price increase, as you can see in the map. This is mostly because this region is the epicenter of the geopolitical conflict between Russia and Ukraine. Following this region, we have Asia Pacific, Japan, and the Med Basin witnessing the biggest price increases as well. In North America, prices are estimated to increase as well, reaching more than $115 per ton. And in Sub-Saharan Africa, the CW price index for gray cement exports is expected to reach around $86 per ton in the fourth quarter of 2022. Now, to wrap up our webinar, I will leave you the closing remarks of our report. Please note that we here focused on the main highlights of this update, and a much more detailed information can be found in our report. So please feel free to contact us through our contacts information I'm going to leave at the end of the presentation to have more details on what you can find in our report. So to finalize, first, Turkey remained the largest exporter of gray and white cement in the second quarter of the year. Vietnam is going to continue to be the largest exporter of clinker, while Japan remained the largest exporter of slag. In the third quarter of 2022, on a yearly basis, ex-works prices are expected to increase in almost all markets, with Eastern Europe and CIS and Sub-Saharan Africa seeing the biggest increases. In terms of the CW price index for all cementitious products, gray, clinker, and white, we expect to see varying levels of increase in this quarter as well. Meanwhile, in the fourth quarter, the CW price index for gray cement exports in Eastern Europe and CIS and Asia Pacific, Japan, is expected to witness the highest increase upon all of the other markets. So to finalize, I would like to thank you so much for your time and your attention. As I mentioned previously, please do not hesitate and contact us so we can help you. And we'll see you in our next webinar. Thank you so much.